Joining me on the line to discuss the state of the German economy and the ZEW figures that were published today is Dr. Heiko Peters from Deutsche Bank in Germany. Now, the ZEW Economic Sentiment Index surprised many today with a steeper than expected drop from 53.3 last month to 41.9 points in May. What are the most predominant factors weighing on the German economy at the moment, and what areas will support the economy going forward?
If you look at the development of the latest indicators as highlighted today by the ZEW index, also other indicators were relatively disappointing for the German economy lately, but you should note that they were on a high level, and also, for example, the Q1 GDP numbers were weaker than expected, but we see currently still a good growth momentum. For example, growth over the winter half year was 0.5 quarter on quarter on average. And going forward, all sentiment indicators, despite the disappointments lately, still pointing to a solid growth rate of the German economy, which is basically domestically driven. Our forecast for this year is currently 2%. Lately, there are some downside risks, but we are relatively confident that we see good numbers going forward.
The euro came under pressure today after the European Central Bank pledged to increase its stimulus spending in May and June. How are markets reacting to this news?
The reaction was relatively strong. We had a steep decline of the euro, as was always the case in the last couple of weeks. We had a strong appreciation of the euro and relatively high volatility in the last couple of weeks. And every time we hear some comments from the central bank, either from the ECB or the Fed, then we have some volatility in the exchange rate. And so in this time, the comments from the ECB that were reported were that there were some comments that the ECB would buy a higher volume the next couple of months and then a lower volume later. And this had then a relatively strong impact on the exchange rate.
And what global developments will investors be looking out for next as an indicator to next month's ZEW performance? And could we see an uptick after today's sharp decline?
It's relatively difficult to forecast or to give a forecast for the monthly sentiment indicators, but on a whole, the fundamental factors is that we expect domestically driven growth by the German economy. We see some weaker developments, for example, exports on the whole in the first quarter and also for the industrial sector. So there are currently, due to the weaker industrial numbers, some downside risks, especially from the external environment. And we have to see, for example, how the US is doing. If the slowdown in the first quarter was indeed temporary, and also how steep will be the forecast, the slowdown of the Chinese economy. If there we see some weaker numbers on the larger export markets for the German economy, this would be clearly bad news for Germany.
Well, that wraps up today's interview. Join us again tomorrow for another fresh look at what's happening on the financial markets. Goodbye for now.